Hey everyone, Douglas here, and welcome back to another MMT Macro Trader live stream. Welcome everyone. We're back at it. Really the most...
Thank you.
Yeah, welcome Bijou. Welcome.
Thank you for letting me into your little internet house.
We're here. We're back, baby. Really the most exciting... I think this has got to be the most exciting live stream on all of YouTube covering the specific niche of applied MMT to markets with the occasional but often common diversion into just broader MMT topics and physics. I think we are. Yeah. Throw those flames out there. Right? Yeah, that is it. I think this is that best live stream. Anyway, welcome everyone. We're planning on for a fun night tonight, pretty much. We've been working hard on a handful of things and really haven't been able to play in anything for tonight's stream. And those turn out to be the absolute best. So, kicking things off, Bijou, how you doing, man? How you doing?
Yeah, okay. Still clearing the head. So my formula puts me at must be 120 years old. And
you're still sick.
Or maybe I should recalibrate that. So it's like 1.2 times the number of days you have the flu plus 1 day. Okay, recalibration there. This is also, I'm so glad to be with you it's my Thursdays at this time of day.
Thursday morning. Yeah.
Only place in cyberspace where you can hear about the infinite government, high-class MMT literary poetry, learn about the new unit of monetary stupidity, the gigavolca. Also, in the chat, we have superheroes like Interest Rate Man, Derek McDaniel in the chat. Also in the chat, this is the only, it's about the third or fourth place on the YouTube where you can see the head principal of the Zoolander School for Economics Modeling, for people who can't do macro modeling good, Mr. Keynes.
Yeah.
And a whole bunch of other MMT eggheads and rebel rousers.
Oh, man.
It's always good to be here.
Let's see.
Today, then?
We also have Michael in the chat. Danger Zone kicking things off today. You get 10 MMT macro trader credits.
That's right.
10 points.
Pull them out of our asses.
For being first. We got Josh dropping in. Thanks, Josh. Daniel, yes. Bijou is from the future. Bijou, tell me, what is the future like? As someone who's only got to experience Wednesday at this point, what's Thursday like?
They put me in charge. They put me in charge of New Zealand time standards atomic clocks here, which are misnamed because really they're nuclear clocks. Well, you could call them atomic clocks. And it's a pretty nice day here. A bit cold, so I turned on the heater, and I'm hoping our electric company will give us free energy, but. They don't create it by fiat. So.
Well, yeah, that's I listen. I have been listening to speaking of giga Volker. I have been listening to gigatons of Austrian economics, and if I've learned anything over the last 2 weeks, it is that there is no free lunch. Everything must be paid for. You can only borrow from the Chinese. And our kids are going to pay for it when it's all said and done. Let's see. Echo Skeleton, welcome, by the way. We also got Eugenio, welcome. Thomas also jumping in the chat as well. Welcome, everybody. Yeah, okay. I'm unfortunately, my chat, my overlay chat, there we go, is running a little behind. But we're back at it. Where was I at? This Friday, by the way, everybody, this Friday, I don't know when he publishes it, but the time is set. Once again, Bob Murphy's going to be entering the ring with an MMTer to duke things out. We got it set up for for Friday. We'll be recording in the early afternoon again. I don't know how quick he gets those turned around for his podcast, but I believe this is for his Bob Murphy podcast, not the Human Action podcast. But we've got a good discussion lined up, and him and I have been having a pretty productive back and forth. I don't know. I mean, I don't get the sense that he's trying. I mean, obviously we both are, to a certain extent trying to set each other up, right? I mean, we'll want some good. We've got our good, gotchas and stuff, but we've been having a really good back and forth. And
nice.
And I'm excited for the conversation. I'm ready to move on from Austrian economics more because I mean, really, when it's all said and done, after everything that I've pieced together kind of for our discussion, it just doesn't offer me, even if they were right, there's nothing you can do with their overarching macro structure. It just you can
do it. It's a weak rag.
Yeah, it really. I just
an agent-based model and just.
I think that's it. I mean, that's really going to be my big recommendation, especially if I get him down and out, and he's like, please, stop. I think, and I would. I mean, that's in all sincerity. I don't think. There's an angle of kind of the Austrian school that I think I can agree with, right? And that is that the government gets in and messes things up, right? And that they are very, the government can be very, very wasteful, all that sort of stuff. I can get in line with that because we've seen it happen. I mean, of course, my counter to that would be monkey JPEGs, but and now X.com. I've got two good counters about the private sector not being exactly as efficient as the public sector, but
only two. Wow.
Well, I mean the reason, but all that. I don't know where I was going with that. All that notwithstanding, I think. Really, what you need to do is boil it down to, if you're going to build models that are agent-based, try and understand preferences, build from there if you want to be predictive in any way. I think you're absolutely right. That would be my recommendation. But
it's like superstring theory. Superstring theory is fancy mathematics from the future that dropped into the present. So we don't know how to apply it to reality. So Austrian school economics is just the same.
Yes.
Or it's unfancy mathematics from the future that dropped into the present day.
Yeah.
Before we had a chance to properly implement it.
Yeah. Something that makes, if it makes sense to you, it makes sense to me. I really think I think the agent-based model
prediction.
The what's that?
I got another prediction for it. Oh, did you have another point to make?
Yeah, I really think the other kind of point is it really just boils down to it. I think this is kind of, I re-listened to the Mosler debate this morning while I was working out, and he made this point quite a few times, and unfortunately the moderator, the 2 or 3 times Mosler was really about to just land on this point, the moderator cut in. But at the end of the day, I agree with the Austrians that it is a political decision, right? So much of what we do boils down to a political decision. And if we can just agree that the discussion about, our kids having to pay for the spending today and it's ruining their future, right? Yada, yada, yada. If we can just agree that is all mumbo jumbo, then at least we can have the discussion about the political decision. Right, because even in their own camp, they have. If there's any Austrians in the chat, let me know. But even in their own camp, they have kind of the hard anarcho-capitalists that are, absolutely no government type, and then they have the we need some government to take care of the judiciary. We need some government to kind of run a military, right? And so even with their own camp, they understand that there's a political discussion, right? It's never about nominal financial terms, but there's just a discussion about the government provisioning itself in real terms, right? And all I'm saying is, I agree, right? Like you guys have this spectrum that starts at absolutely no government whatsoever to going all the way up to maybe a military and some law courts, right? But we can just extend that spectrum a little bit further, right? And just add in, okay, maybe the government pays for the roads, right? Maybe that's an infrastructure thing that the government, it just makes sense to have them be, kind of the central, right? But that is a political discussion and has nothing to do with the financial side. They just have the financial side completely backwards. So
that would be charitable, but yeah, maybe. I think I have another. So I have another little prediction about that.
Yeah.
So you know how last week I mentioned you can sometimes get overwhelmed if you over prep for a debate and lose a bit of spontaneity because you're just heavily loaded with too much ammo and you're thinking, so you've got all your notes and everything ready to fire. But I reckon you can tell me if this might be the case. I reckon no matter how much you prepare for one of these kind of debate things, you're going to have a blind spot. So I reckon a blind spot will be exposed, and that, to me, is a good reason to do it.
Yes. What do you think my blind?
What do you think my blind spot? It's like he comes up with something, and it's like, whoa, what? I'm not prepared for that.
What do you think? What do you think my blind spot is?
I don't know, because it's a blind spot. It's all rummy. Rummy again. The unknown unknowns.
Yeah. I'll tell you what. Michael in chat has been helping me kind of prep for the debate, and he did. And this is the. I have a little notebook and everything, and right at the top of the notebook is exactly what he sent me, and that is that I need to go into there focusing on the things that I am most confident about, I know the best, stick with those, and let everything else follow from there. It's kind of like golf. I don't know if you've ever golfed before, but there are a million things they're going to teach you about your swing. How the wrists are supposed to be, how far bent over you're supposed to be. The plane of the swing, the angle, yada yada yada. There's a million steps to the damn swing, and of course, what they fail to ever tell you right before you're about to hit the ball is you need to just forget all of it and swing the damn ball, right? And so that's hopefully that's my attitude going into it too, specifically. With regard to what you're saying is, I've done my prep. Tomorrow I'm just going to categorize my notes, clean them up, but I'm not going to try and learn anything else at this point. I've done what I can, and
it's like elite sports, like your Peyton Mannings and whoever the Patriots guy is,
Tom Brady.
They say you learn it all when training, and then when you're really elite, you don't know anything about throwing the football or shooting a hoop because it's all in the pre-programmed in your prefrontal motor cortex where it all can happen a lot quicker, bypassing any consciousness.
Yes.
So you actually become for an elite sports player, you really have to become stupid, and that's the way the artificial neural nets works, right? It's training that conscious human beings are put in over decades onto the internet. And it'll just bunched into a large language model, which then becomes stupid. So it can spit out basically anything
as fast as it can. Yeah. I'll tell you what, though. One of the things that we just kind of kick some conversation off. By the way, I think I've seen a few new names jump in. Thomas, I don't know if I said hi yet, but welcome. August, welcome as well. I also know
Thomas is old. Thomas has just been absent for a few weeks.
I also know, Jay, I know you're watching, man, and I appreciate it. I appreciate it, Jay. Welcome back. You had a great presser today, dude. Man. But if hit me up. My DMs are open, by the way, Jay. So you can just hit me up on Twitter. They're open.
Wait, this is public though. This is public.
My DMs on Twitter.
I got a Mosler story to tell you about that.
Oh yeah. No, before Warren told you that, I actually had Jay saying, "Look, Doug, I know we're cool here and everything, but if you get too close to Mosler, I can't. We're gonna. Well, I mean, he told me exactly what Mosler told you. Yes. Neil, by the way, Neil, I don't know if I've seen you before. Welcome, man. Maybe you were here last week or a week or two ago, but welcome to everyone in the chat. And if you are in the chat and you haven't hit that like button, hit that like button. Ask some questions too, because like I said, sorry, read
something
chat.
Here.
We do something.
We do a bit of
God,
here. We're trying to sort of We're trying to get the MMT into our prefrontal motor cortex, so it just is automatic.
All I saw was
trying to do here.
All I saw was Thomas saying difficulty. I'm like, well, is he having a difficulty with? No, but he's not having a difficulty. Hit that like button. Make sure you're subscribed. All that good stuff. And if you have any questions, fire away. We really, I have some ideas for what we could go over tonight. One of the things I was thinking. Let me know if this is something you would want. Let me know if there's anything you want me to hit specifically, but if we really run into nothing, I'm moderately prepared to kind of go over the my MMT origin story as it relates to markets and some of the first things I noticed. Maybe we can go over something like that. That might be fun. And then maybe build into next week. The other thing we can do too. Oh my God, the other thing we can do too.
Did you have any?
Go ahead.
Yep.
No.
Oh, did you have any highlights on your Twitter journey today?
I've been having fun.
Week or so?
I was
Dunbar,
I was in a really
pissy
mood yesterday, and I gave out when I get mad, when I just see stupidity. I was already kind of just in a bad mood to begin with, right? I was a little grumpy. Work was kind of dragging me down, you know.
Dear Douglas, now. Douglas, dear. Douglas, my little. I'm Douglas's mum now. That is not the time when you open up your Twitter X app.
But you know what's funny is I was Xing myself, zeeting myself, and when I get kind of upset, that's really when I feel kind of that I want to release the secret sauce of everything I'm doing, right? Because there are some things that I've still kind of held close to the vest to a certain extent, and I mean they really are. I mean some of the things we piece together are just quite spectacular, and so I feel more like I just, some people are so not stupid, but they're just so stubborn. I've
got to calibrate that word spectacular. That's not the kind of word I just throw around when it comes to science and economics and mathematics.
No, this stuff is. Yeah.
I have to calibrate it for the United States linguistic modules. It's not something you'd say if you were a Kiwi.
What does spectacular mean if you're a Kiwi?
It's pretty much doesn't exist, right? I don't know.
Spectacular?
The All Blacks. We're on a good day.
Well, I mean, we are watching. We have 20 people watching the MMT Macro Trader, the most spectacular live stream. We all know what spectacular is when we see it.
Yeah, I translated for the US brain.
The All Blacks. Isn't there a big? Is there a tournament going on right now? Is there a big?
A few months' time, there'll be the Rugby World Cup.
So there's the Rugby World Cup
every 4 years.
Okay.
Yeah.
Okay.
But yeah.
Is there a cricket tournament going on that's big? No.
The Ashes series between England and Australia is an annual love fest between Australian and English cricketers.
Okay.
Usually there's a big tour party that makes the journey to whichever country it's in. It alternates. And in the early days, the English were supreme back in the 19th century. And the Aussies turned up one year with some people who are actually sportsmen rather than like upper crust gentlemen. And they actually played like as if it was a sport. Mm-hmm. And they thrashed the English. And the English women, they were so depressed, they took the stumps out of the ground, these 3 pieces of wood that, the batsman has to protect. So it's actually more awesome than baseball because it's sort of like you're protecting your castle, and then you're trying to score runs at the same time. It's just such an awesome game, full of nuances. So anyway, there's 3 sticks in the ground poking up that are about just about knee high or above. These old women, they took the sticks, they burned them into ashes and stuck them in a trophy cup and gave them to the English. Gave them to the Aussies.
Okay.
And English cricket is dead. You conquered us. Here's the ashes of English.
Oh, that's very symbolic.
Yeah.
As a Kiwi, do you care about Australian cricket at all? I mean,
I certainly do. Whenever we can wallop them, it's actually an incredible event because they are so supreme in cricket generally, and along with these days India and Sri Lanka, and that whenever we get a victory over the Aussies in cricket, it's kind of like, I don't know, what's the freaking analogy? It's like David defeating Goliath, to use an old one.
Okay.
Yeah, because we're so tiny and they're so big.
Yeah,
and they were professional before. So yeah, whenever we can beat the Aussies, it's pretty cool. It's awesome.
Yeah. That makes
the only reason we don't have that in rugby is for some reason we've got magic rugby juice over here in our water or something. It's like a religion here.
Yeah,
we get bathed and baptized in rugby, and so it's diluting over time with other sports encroaching and other things.
Oh yeah, that makes sense. That makes sense.
Young kids, Pacific Islanders and so forth interests, but still, there's some magic juice here, and so we don't. When we beat any other nation in rugby, it's not such a spectacular thing. It's just the All Blacks. They can't help winning.
Yeah. It's like the Americans in everything we do.
Except MMT.
Oh, yeah. I felt like that one would hit.
Man, I've never heard you go to that length. I think there's a few Olympic sports you still get thrashed in.
Yeah.
We're still thrashing you in rugby, by the way, and rugby sevens and rugby thirds and rugby twos.
Yeah.
And everything rugby, we thrash Americans in.
Yeah.
If we bothered to put on helmets, we'd thrash you in American football too.
Oh.
We just put on our cricket helmets.
Yeah.
I guess we've got to know the rules. It might be a bit of a struggle.
It's amazing how many people in the chat that know cricket and rugby and stuff. Yeah. It's a very okay. Well, I've attempted to learn cricket a few times. We must have been.
It's a cool game.
I wonder if it's 8 years ago now. Yeah, it was 8 years ago. The last cricket world, not the last, but the one prior to the last cricket World Cup. We were in a big development project, and a lot of the developers on the project were from Pakistan and India. That was all that was on the TVs and everything like that. And I tried to learn, but I couldn't.
Those guys,
I couldn't figure it out.
Those guys are really into it.
Yeah.
Same thing when I was in the States in Gainesville, Florida. The Indian and Pakistani college students just would get together and put on the satellite and invite people over to watch it. It was a blast. I'm usually not such a social guy, but that was one time when I had a really good time with some total strangers, just talking cricket and
yeah.
They really love the they have heroes from other countries. They're very eclectic and international in their perspective. Of course, they love their own home nations. That would be India, Pakistan, Sri Lanka, Bangladesh. But there's a couple of particular Aussie and New Zealand superstars around, at least in the past, who they really also idolize.
Yeah.
Like, there's a guy, Richard Hadley, who was probably the best ever cricket bowler of all time, just by statistics, and he broke a lot of records. They've been broken now because professionals play more often than they used to in the 80s and 90s. But Hadley was just incredible. He took it to a scientific level of his bowling, and economic and elegant and just incredibly difficult for a batsman to play. And he was just relentless with his accuracy and swinging. And when I visited India, and I mentioned I'm a cricket player or something, kids would just flock around and they'd start playing or whatever, or I'd join in a game on the street, and they're just like, oh, Richard Hadley. They just idolize some of our superstars, which is so nice. It's almost like one of their sports religions over there. It's a very, very good game if you can spare the time to play it, and it almost takes as much time to watch it all day. Pretty good. People get very drunk at the end of the day in the ground watching cricket. It's got quite a few hours to get.
All right. Cricket. We'll get back to cricket at the third hour. I think people are clamoring for the MMT MMT juice. Did we figure out what Derek was discussing on Velocity August? Yes, I think we did. I'm going to summarize how I understand it, Bijou, and then
Okay.
and then you can jump in and summarize the velocity. Okay. I agree with what Derek was saying regarding velocity in the truest of sense. There is no, the reason there's no velocity of the money supply is because there's no money supply the way monetarists and neoclassicals would define money supply, right? So in that sense, I agree. Velocity of money is effectively not an illusion, but a very inappropriate way of saying what I am saying, which I'll get to in a second. So, Bijou, you tell me if that is a fair.
There's no particular money aggregate they can point to that.
Yeah,
that has a measurable velocity that has meaning in terms of the old quantity theory of money story. But if you build a macro model like Steve Keen and you just define it, then it has meaning. It's just an abstract thing in the model, and in reality, it's a little hard to find or piece together what that abstract thing actually is. Does that make sense?
So in the abstract, the way Steve Keen defines it, I guess you would say, in his model, he would add up what the entire money supply is, and what he would define. And I'm thinking right now, purely in an endogenous system, he would say the entire money supply is the amount of outstanding debt. Correct?
Yeah, probably. I forget how he would do it.
But if we just define the money supply as the amount of outstanding debt, right? Then at any given point, at any given point in time, you have a measurable amount, right?
Yeah.
Right. And then in the system itself, in the macro model itself, that amount of money can be measured beginning to end, how many times it makes its way through the circuit. Right.
Exactly. In the godly table, everything's just a transaction, and so you just measure the number of transactions.
Correct.
That many, and some of them will just be purely financial, so don't count, and some of them will be producing real output. So if in your model you've got workers, the transactions there will represent real output. That's the meaningful thing. And the other one would be bankers, and that would be just involving financial assets, which I don't even know if Steve King worries about that stuff. You probably should, right? Because it's such a wasteful, parasitic.
No, I think he does. Economy. I mean, I think that's. I think in the base model he doesn't.
He puts in like.
No, I think he does. I mean, this is always the trick, because, and I think it's hard to model this all the way through in his model. But you do have a spectrum of assets that ultimately go on the balance sheet of the banks, right?
Right. So if you do, then that might also count if you're worried about purely financial assets. Yeah.
Yeah. And eventually, though, the way that his model falls apart is eventually the asset prices crash, right? I mean that's the necessary end game for the endogenous cycle, is that the asset prices crash and are never able to stand back up because of the dynamics taking place in the system. Correct.
Yeah,
Bijou says.
Yeah. And if your equations link that to any, putting workers out of work, you also get unemployment crashing, so real output also.
Correct.
Crashing.
Yeah. The whole system can never start back up again. This has actually been part of my studies recently. It's been good to go back to all this stuff, because you kind of you do. Actually, it's weird that you say it as in the sense of like you learn it like a deep learning model, learns the weights and biases in the model. That's almost how it feels in your head. So, kind of I don't know. This is a way. I don't know if this is something you do in like construction, but reconcretizing the concepts of how that endogenous cycle works. You need you need for the endogenous growth, right? Assuming you have a governmentless private sector, right? So there's no government spending being injected. You can get growth, right? This is actually one of the things I think Bob Murphy really misses. No one on the MMT side is disagreeing. You can get growth, right? But the model contained, right? You can create the dynamics where, as long as you are having that private sector debt increase, you can get growth. But as it increases, that squeezes the worker share of that growth. So what they actually get paid out of that growth squeezes, right? You can continue to increase. Eventually you get to the point where the overall private debt load relative to growth gets so large that you need that growth to continue to accelerate. And it's only able to, as much as you're able to squeeze the worker's share of that continued growth. And eventually the acceleration cannot continue, and you get fire sale of assets, which then just exacerbates the downside. And this is one of the things that Moser pointed out in the debate. And he's just, you don't realize this stuff that he realizes and can summarize in one sentence until years later. But he just threw it out there. He's like, well, yeah, because Bob Murphy was going on about something. He's like, well, yeah, the private sector is inherently pro-cyclical. It drives up and propels the direction higher when the boom is going higher, and then it also proactively pushes the markets lower in a continuing fashion as they go lower. So that is the endogenous side. Now, going back to the velocity part of the growth equation is how fast those money units are being circulated in that model. So again, this is not a money supply argument in so much as it is defining the turnover, the amount of times each dollar makes it through the circuit. And I think from what I can tell, higher interest rates makes that circuit run faster. That seems intuitively correct. But that also seems to be what I can tell from the data. And and if that's the case, here's the final point, right? This is the point I keep making on Twitter, moderately cryptically, but to kind of fill it in here. I think when the Fed lowers interest rates, that it's it's already sensing a slowing economy to begin with, right? Because the endogenous cycle is just doing its thing naturally, right? It will have its ebb and flows, but when it lowers rates, what it's doing is it's flattening out the potential velocity that would keep that acceleration going, the velocity of money that would keep that acceleration going, right? So that's why I think it's really not the inversion that matters of the yield curve. It's the reversion. It's when the Fed decides to start dropping interest rates without offsetting fiscal spending, which we saw in 2022 or in 2020, right? We dropped to zero, and in fact, we might have been close to a recession in 2019. We'd really been seeing fiscal spending fall off a cliff. They dropped the rates to zero. One, you have immediately everyone in that first month in February heading into March, everyone just draws down their credit lines, and you see a massive immediate spike before the stimulus of kind of a mini credit boom. But then after that, you get the massive fiscal spending, which offset any negative damage that would have happened with 0% interest rates. And then really we hit a Goldilocks period there, right? We had the fiscal spending and we had 0% interest rates, which is really what the MMTers want, right? I mean, that's really what we want. We want, yeah. Anyway, those are my thoughts. That's kind of how I'm seeing the entire picture there.
Oh yeah. I also noticed very quickly there was an interesting comment on that from someone, Kevin Tart or something. It's really interesting when people use symmetry arguments for something that's fundamentally got hysteresis and very asymmetric. It's like a bit mind blowing that people can have such a simple story. I think his comment was right, something like Oh yeah, so the inversion of the yield curve is not important, but the reversion is. It's like you've got to be total bananas. Obviously, everything's perfectly mathematical and symmetric.
Yeah.
And
Yeah.
classical land.
Yeah. Yeah.
That was funny.
It was really funny too. One of the guys we've had a lot of engagement with, Dunbar, came in.
Oh right.
And got it. Like, he understood what I was saying. And I couldn't believe it.
Yeah, what was that about?
He actually figured it out.
I saw you saying that. Yeah.
He kept figuring it out. I mean, I wasn't gonna I was just gonna do the stochastic, or not stochastic, Socratic.
Stochastic.
Socratic method with Kevin, right? Well, what do you think this means? What do you think this means? You know.
Oh yeah.
I wasn't.
Sometimes that can work. Better live rather than on Twitter, that one.
Well, no, I didn't want to waste my time explaining anything to him. Like, he can waste his own time, right? I mean, I was just going to waste his time.
Yeah.
So but all of a sudden, Dunbar, we've had a lot of back and forth with, all of a sudden he just comes in and it's just, I mean, he's never given us anything. Sometimes the conversations are hitting your head against the wall. But all of a sudden he comes in and he's like, no, this is what Doug's actually saying. And I'm like, holy shit, he figured it out. He absolutely figured it out. And then we just kind of ended the conversation. I mean, that was that. He's like, yeah, I think he didn't agree, but he at least understood. So I was pretty impressed.
Oh, okay. Oh, that's interesting. Didn't agree, but understood what you were saying.
Yes, which is a rarity from that side.
Yeah. Yeah, it's actually nice. I like it when that happens, when they get the argument. I don't really engage a lot on Twitter these days, but like one thing Henrique sometimes does is he sometimes sees things, reasonably clearly. We just disagree on fundamentals. So I hadn't followed him, but he was following me, so I followed him back and apologized for not following him because I wasn't really paying attention to any of that. And I just had a very quick exchange of DMs. It was just like, enjoy the intellectual clash.
You had back and forth DMs with Dunbar?
Henrique.
Oh, Henrique. Oh, okay.
Yeah.
Okay.
And he writes back and says, yeah, same. No worries. And I enjoy listening to people with different opinions and ideas. So that was that. So yeah, it's always good if they can actually understand what the MMT really is saying without straw manning MMT. I count that as progress.
Yeah. He then said that he's never heard any MMTers actually make the case that I did. And therefore, I'm being a trickster or something. I don't know.
Oh yeah, they pulled that one out.
Yeah.
We're always changing and moving the goalposts.
Yeah. He did a lot. He did a lot of well, can you show me that you said that before? And I'm like, I'm like, I did. I've said it before. I don't get it. But anyway, those are my thoughts, at least with regards to kind of the discussion with Derek. Hopefully, Derek, you see this with the discussion regarding the velocity of money. In principle, I agree with Derek, but as Bijou said, if you're gonna model the overall macroeconomy and you're going to define velocity as a certain thing to help you ultimately come up with another definition, which would be growth, as long as we're clear of what's actually being counted there and tracked there, then I think we can kind of build from there. And I would say that the way that Steve Keen is defining growth, the turnover of the money matters, how many times each dollar makes it through the circuit.
Yeah. And what you're doing on MMT Macro Trader, looking at different velocities and accelerations of the time series, are also sort of abstract, right? So there's nothing actually moving or accelerating there. We just have a differencing in time, and it's an econometrics thing. And what you're saying when you mention the velocity of margin debt or acceleration of margin debt and so forth, it's still actually kind of, in some sense, is an abstraction. You're actually measuring with real data, because you can do that with anything you've got over time.
Yeah.
But what actually is ontologically behind that, we're kind of not saying. It's like, people are running around pressing buttons on their computers. Yeah, that can be velocity of margin debt or whatever you like.
Yeah.
So you got to abstract quite a lot of these things to speak macroeconomics language, and that's kind of what you're doing.
Yeah. Got a good question here on Mark in terms of what is the most relevant measure of money. And whoops, I didn't mean to tag my own my own response. I meant to have Mark's up there. M1, M2, M3, etc. I don't think I've ever heard in any sort of MMT presentation the usage of any of the classical money supply measures. I could be wrong. I mean, to make a point, I mean, obviously they've been referenced, right? But from an MMTer's standpoint, and especially my standpoint as someone who's trying to understand where markets are going, I've never looked at the M's besides the first time that I looked at them and realized there's nothing here statistically to glean, showing me where the money supply is, which is, I mean, that's all the M's are at any given point in time. And I think I used this analogy last week, but I think it's the right analogy. It would be like going onto Google Maps, putting just a dot above Google Maps and saying, hey, that dot is an airplane. You don't know what direction it's pointed. You don't know, what its velocity, what its acceleration is, how fast it's going. You don't know where it took off from. Tell me where the market's going, right? Or tell me where the plane's going, right? To me, that's what the money supply measures are doing. They're just not terribly helpful. So what is helpful?
Yeah.
Give me a second, Bijou. You tell me what you think of the M's while I pull up what I think actually is the most helpful measure. By M's,
you can pull it up.
Money supply.
I'm not sure actually. What I think of the M's is useful for is just the separate components, so that you get the accounting straight and no one's committing fraud or counterfeit. Or
that's a good one. Yeah.
That's what I think about all of that. And when you model it abstractly in a model, you talk about something different. You could maybe like do a model in Monte Carlo or correlate it with neural nets, whatever, to something to do with those aggregates.
Yeah.
Like you could call it what your measure in your model is best reflected by a certain amount of the monetary base, a certain amount of M1 and M2 and M3 and so on. You probably do that. Like you say, what's the use? I'm not sure what the use of that is, but maybe someone could think of a use for that.
Mark, I have on screen ready to go. Oh, this is so ugly. I have a version of this that has it doesn't have this terrible background.
Eugenio. We're up to M8. The Mosler 8-cylinder Moslertron.
Oh, there it is. Okay, I think I've got it. I think I do. Hold on.
What have you got?
Hold on. There we go. Okay. Let me make sure I got the right thing up here.
I mean, we are interested in some MMT aggregates like the sector.
Yeah, there we go. There we go.
Private household debt
right.
would be
that would be a big one too. Yeah. This to me is really the most important chart. This actually, you know what? Let's transition there. Let's go there. Let's go ahead and I mean, I'll kind of start the story about how I really got into kind of MMT, applied MMT as a way to understand markets. When I was re-listening to the debate today between Murphy and Mosler, and Mark, by the way, hopefully I'm not coming off as trying to pick on you about asking about the M's. They're just really not that instructful for my purposes. But one of the things that really stood out to me back then is really this idea of just the government becoming the private sector savings, right? And that was, I remember listening to the debate, and then I listened to a few other things that Mosler had to say right away, and that was one of the things that that he really pressed home. And I think Stephanie Kelton was part of some of those discussions as well. And the very first thing I ever emailed Warren about was like, hey, I know you did all this stuff with bonds and you understood bonds this way, and that was kind of arbitrage and stuff like that. But I'm like, I think my thought is that really the government debt should be, because it is the private sector savings. There's so much incentive to have that savings be in the form of investment in stocks, tax incentives and all that sort of stuff, that there really should be a very strong correlation, right? That should match up, and that was some of the the initial measures I ran, right? I mean, to me it's no coincidence that the market cap of the entire NYSE is always right around where the national debt is at. That's what I emailed him. He's like, yeah, I think you're absolutely onto something. So, or no, I mean, he didn't even say I was onto something. He's like, yeah, that's exactly kind of how I understand it. So that was like the first step in getting to understand what data should correlate with markets. And for me, this is the most important chart that I have on the screen. This is effectively the year-over-year rate of change of the national debt, specifically to be explain exactly what this code is doing. It is from the monthly treasury statement, the federal surplus or deficit accumulated over time, adjusted for CPI, year-over-year change. But the reason that this is so important is it shows what the private sector savings is. And then if you understand how vertical money, horizontal money, and then the rest of the world interacts, you understand from here what to extrapolate, where to look next. What I mean by that is, and Bijou, you can cut in if you need to. I'm going to go on a little bit of a monologue here, but
go on. Yep.
If the government, someone's got to be running a deficit, right? It's really just what it boils down to, right? Someone's got to be running a deficit, or you have a dying economy, right? And and so one of the sectors has to be running a deficit. If the public sector is running a deficit, that means the private sector or the rest of the world has to be running a surplus, right? It's just It's just the way the accounting is going to work. And since we live in a monetary world, and the unit for the surplus or deficit is going to be the dollars, that means those are going to be dollars going into the private sector. And of course, we use those dollars for a handful of things. We use them to buy things, we use those to save, or we use those to invest, right? You can either save your dollar, or you can hand it off to the next guy for either some good or service, or as an investment. And so I mean if you just think about it that way, that means no matter what, when the government spends, that is either going to become some form of savings that finds its way into the financial sector, or you're going to buy something with that, and then that person, that's effectively a profit for, or some sort of revenue, at least income for the next guy, right? So as long as you have some sort of accelerating fiscal spending, you should expect the private sector to be buoyant, to be maybe even accelerating itself, right? And that's exactly what we see, right? That's exactly what we end up seeing. Every time after a recession hits, you get a massive kind of stimulus injection, because government spending is countercyclical, right? You have the automatic stabilizers, you have unemployment, government spending always goes up by design after recessions. And so if you kind of start the cycle there, the government spending surges, and that's why oftentimes you see a quick mean reversion in markets. Things really kind of fly higher at that point. And again, as you can see in this chart, after every major government surplus, you end up with a very quick shot higher from the deficit. So that's point one. Point two, we'll jump to the other place where you can gather a deficit from. That's a little more shaky, but I don't know, Bijou, if you want to jump in, give some thoughts on this part. We'll
I could jump in afterwards. How many points do you have?
I think the next point then that I'll pull up here, and I gotta transition off of the screen. Hold on one second. Ken PDX, welcome, by the way. Hope you're doing well. Mark, yeah, see, I wouldn't divide anything by M2 personally. Private debt to GDP, US, BIS. All right, I can switch back to the other screen. So the next thing we want to look at is in these instances where the government is running a surplus. So the government's running a surplus, right? That means we are taking net financial assets out of the private sector. So this is true, right? In theory, you can get a situation where the government runs a surplus, and it really is the private sector that is supplying the spending, if you will, from the private sector, right? So you can really get a suck out of the private sector, and you can continue to get growth too. But where's that growth going to come from? It's going to come from somebody deficit spending. And in this case, it's the private sector itself that is running a deficit, right? So you end up getting a massive expansion of private debt. And so this is where the growth can come from. And this is exactly what we saw heading into the big dot-com bubble as a massive acceleration cycle or growth cycle of private debt. And this then is the second thing that we want to look for. So if the most important thing to understand the macroeconomy is government spending, the next thing we need to look for, especially when we're entering periods of fiscal spending rolling over, we need to then look at the private debt side, the endogenous side. You can get growth from that as well. That's when we pull up the private debt to GDP, and again from the very early 90s into the final bubble bursting in 2008, you saw a massive acceleration of private debt. 2008 it ended. You got the big contraction, and what you need to be very concerned about is when the bottom has fallen out of the government side, right? So we have government spending falling out, and you get then a contraction of the private debt side. That is when you're going to get massive recessions to kick in, because both avenues of potential growth have now been removed. There is another, it's like Leia in Star Wars, there is another, but in our reality, that one doesn't exist. That would be getting the net financial assets from being a net exporter as opposed to a net importer, because in that instance, you would get net financial assets from the rest of the world as your private sector savings, a la Germany is a good example of this, someone who's been a net exporter. Canada, someone who's been a net exporter. The U.S., post-World War II, net exporter.
Yeah.
Right? Those are all instances where, we actually had a stable economy because of the financial assets coming in from the rest of the world. That's not the way that it is now. In this instance, obviously, we are net importers. The rest of the world is a net saver in our currency. So that is, those are the two. Those are the two in that order. And so 2000, we had a contraction of private debt. We had the big surplus going on. Had a pretty nasty recession. Same thing in real terms. We get a surplus in 2007, 2008. At that same time, that's when we begin to get a contraction on the private debt side, and then the jig was up at that point. We had the great financial crisis play out. That's my story, and that is what you need to be looking at. That's
what I said. You just took like 10 minutes to explain what I said. Yeah, it's the sectoral balances. Those are the money aggregates that matter. But Douglas actually did it with data and logic. Whereas I just said it as a decree from high.
I mean, you're
from the MMT brain.
Yeah, you're channeling your inner Mosler, right? Like, of course.
MMT priesthood.
Yeah.
Yeah, you just say it, and everyone else has to figure it out. That's how it works. So we got. I've got a little set diagram to give you later on that, if I can remember to do it. About. Yeah, I'll have to remember. I'll make a note of that next time you're talking. Can I add a little bit of extra nuance to that?
Yeah, absolutely. Mark, glad you liked it, by the way, man. So, glad you liked it.
So I can imagine, Stephen Grumbine or some of our other comrades on the left jumping in and saying, well, Douglas, when you say the economy is buoyant, what does I don't have the beeper, by the way, for swearing. That's Douglas's control. So we don't have that coordinated yet. What the bleep are you talking about? Because the buoyant economy could be private sector, which by which we'd mean non-government sector, so domestic plus foreign, non-US government. We're talking about US dollars here.
Yeah.
For the purposes of this analysis. Same would apply for any other country, though, issuing non-convertible fiat currency. So you'd say, well, but that could be going to just send weapons to, Ukraine to, help kill Ukrainians and Russians. That's a buoyant economy. And a lot of those are real resources. But on the other side, the monetary financial asset side, then you've got a whole lot of arms manufacturers, weapons manufacturers that have now got an injection of revenues, and they can spend that and buy stocks, push the stock prices up.
Yep.
And then your quote unquote buoyant economy would be, those who are getting in on the stocks get in early. And so this is just going to squeeze out the little minnows, and they're going to have to scramble with money to keep up if they're playing the stock market as well.
Yeah.
And so on and so on. And so that whole cycle, it has these other dynamics that you wouldn't really want to call buoyant economy. You'd say it's heating up the economy, and where the energy and the heat goes can be completely dystopian. And okay, so that's one thing. The other thing is going back a few minutes to your endogenous story and the way Steve Keen kind of models the a generic sort of crash with the credit or debt getting too high to repay.
Yep.
Out of output, which is what you'd model in a Minsky model. You'd model the output as a function of how many workers are employed, and so on. The thing about that is, obviously the world doesn't come to an end the way employment doesn't just drop to zero. What would happen probably in the real world, although we don't have.
Yeah. This is a good point.
What happened in the real world?
Yeah.
What happened in the real world? Because I'm trying to fix a few blind spots that you might have with Bob Murphy here. You see, so what might happen in the real world was the banks would just there'd just be bankruptcies.
Yep.
Now, bankruptcy is a deficit spending from the sort of banking sector. It's exogenous money. So that's kind of like what I would call a Wheelerism for Mr. Cruz, Michael Cruz in the chat. It's like government without government. It's just government just only doing exogenous money and nothing else.
Yep.
Basically. Bit of a near feudal type of dystopia where there's no, it's just now the Austrians might claim, that's what we want, because if you look at private sector, non-government sector credit expansions, it is for stuff like tech stocks or whatever the market is gin up, all this stuff. And of course, all of that might be a little bit parasitic and predatory and like very feudal, like so the rich get richer. But at least it's not funding war. And at least it's not the big government, putting its messy finger into things and doing welfareism and making people dependent on the state for welfare because they can't figure out how to generate jobs because they don't know about a job guarantee, or going to war for whatever it is, for oil usually, or other political ends. The Clausewitz theory of war is just extended diplomacy and all that sort of nonsense, which you can do if you have a great power like a government, which is not so much a blind spot. It's just to say that, but don't we just then want to expand democracy and have a better the people have a more control of their government is the direction I'd go in, rather than direction of zero government and the kind of more feudal type of society. Yeah. So that's one thing. But I mean, you already know that. So what's the blind spot? I guess the blind spot might be the bankruptcies are kind of you have to talk about them as explain how they are actually exogenous. So kind of like having exogenous money. And so what was the other point?
Let me riff on that point real quick. So to play Bob for a second, I think the way an Austrian would put that is they would say something akin to it's a good thing that markets take time to shed overpriced assets to allow the reallocation of the real resources to occur, right? That we had this artificial boom, and that it's a necessary part of the process to allow that to play out. And I think my counter to that would be something like, no, the reason that we're seeing that play out that way is not because of some massive misallocation of resources, but because we have a monetary system that has certain dynamics at play. That's kind of the only way we can keep score of this thing, and unfortunately, some of those dynamics can get out of line, and that even as I'm saying that, I don't like that. I don't like that.
Have a think on that. Make it a bit more elegant. Let us know.
Go with your next. Go with your next point, though. It's a good one you brought up. Yeah.
So, hang on. I had something scribbled down. I can't read my own handwriting.
Well, hold on. What you think of it, David Jr. David Jr. Welcome, Roar Nora. Welcome, my man. Maybe you're a lady. I don't know. But welcome back. Zero shot. Welcome. Yes, we had a lot of hiking today. We haven't talked rate hikes yet, but maybe we will get there. Markets seem to respond pleasantly to rate hikes. Yeah, here we'll switch over to the headline. Jay, getting it tighter. And but not tight enough. Not as tight as he likes it. What did he even say? I didn't even read. Fed is on a prolonged hawkish hold. Did he come out and say anything? Rate cuts unlikely this year. Okay, so maybe they're gonna hold off. Downsides to not curbing inflation outweigh the short-term pains, Powell says. Okay. All right. So it looks like we might be done with the rate hikes. Listen, Bijou, if you come up with your other point, by all means, cut me off. I'm going to throw it out there. I'll throw it out there. Listen, I don't really care if this comes true or not. I'm not betting on it in any way. But my guess is we'll see 2 or 3 surprises to the upside on the CPI print coming here very, very soon. So I'm not even just saying, surprises to the upside, right? Whatever market consensus is, that we'll beat it 2 out of the next 3 months. That's my bold call that we're going to start seeing some surprises to the upside, and that'll make me wonder what the Fed is going to ultimately do. Because I think the next thing too is, we saw oil really take off this week. I don't know where we ended today. I think we might have seen it in the green. I'm sorry, in the red today. But I think those inflationary pressures economy-wide, or at least what the Fed sees as inflationary pressures, might start picking up as well. Anyway, those are my thoughts. Bijou, did you come up with your other idea?
Not really.
Okay.
Not really,
okay.
But one thing that was related to what I said is that you want enhanced democracy, is what August Hotel in the chat just pointed out. It's like it's a bit of an arguing point you might get from an Austrian that democracy is a tyranny of the majority, or leads to demagoguery. So I just want to make it clear that that's not what I mean by expanding democracy. That's the opposite. So if you have a weak democracy, like a pretense of democracy, then it can like squirt out in the other direction, like trying to squeeze a balloon. And I think that kind of happens around the world. You can see that you lose democracy because you didn't start with democracy in the first place. That would be my issue with that. So I think you've got to be a little bit careful with Austrian scholars and libertarians who they look at the world and they say, New Zealand, Australia, Canada, whatever, they're democracies, but they're not functioning very well, are they? Huh?
Yeah.
Huh?
Yeah.
And I'm like, you idiots! We don't live in a democracy. Democracy is a bit of an ideal, and I think it also means many things to many different people. So you want a representative democracy, So it's not like you have to rely on every single person voting on every single damn policy or issue or extended decision, and I don't think human society has really come up with, the best sort of formal democratic system yet. You'd say civilization is a work in progress, not something that any particular country anywhere is really particularly well perfected, unless they're a tiny island nation which is sort of self-supporting, and there's so few people that they're all just get on with each other. That's what I would call a democracy, but that's very idealized. Anyway, so that might be another point that Bob throws at you, that he might out himself as well. I'm not in favor of democracy. I'm just in favor of the market. The market's determining everything.
Yeah,
and so that's a whole can of worms you might not want to open, because you might want to focus on narrow MMT and interest rate stories and all that sort of thing. I don't know.
I'm thinking on that. I'm thinking of this idea. One, by the way, MC, welcome, man. Thanks for dropping in and saying hi. Are you saying? I read these things so quick, so maybe I just need to slow down and read it. Are you saying there are banks out there offering mortgage rates below the Fed funds rate? Am I seeing that? Am I seeing that correct? Let me know, because I just looked up mortgage rates. I hope it's not showing my exact location. I think it's just saying Michigan on the chart or on the screen.
I guess it's possible, right?
But nothing prevents them. We're not even at the Fed funds rate yet, right? Oh, whoops! I just wanted Fed funds. One of the things I was thinking of, though, Bijou, while you were talking, yeah, we're only at 5.5. Yeah, what? Okay, yeah. If it would be possible for them to do that, to drive loan generation, I don't think it would be illegal, but I don't think. I think they would quickly become insolvent. I think that would be the problem. I don't see how they would.
As long as they're meeting their reserve requirements and their capital adequacy requirements, they could keep doing that for a short term. Would it be
shots? Zero shots saying there's a regulation against doing something like that. So,
is it?
I can't imagine, even if it was possible, though, I can't imagine a regulator would come in and be okay with something like that. I mean, they would obviously see a massive amount of risk there if they were doing something like that. So I don't see how that would be possible. Going back, though, to the Austrian thing, Bijou, I think one of the things that I'm just kind of playing around in my head with right now for response, because I know I'm going to get this question, and that's going to be something to the extent of that idea of the misallocation of real resources. Right. And I think the way that I would think of it is if
how do you define misallocation?
Well, and maybe that's what I need to look up. How do you even know that something is misallocated?
Yeah, exactly. That's the point. See, what a moral economy, which is a very classical concept from Ricardo and Adam Smith, and that they're very good thinkers in many ways. They cocked up a bit, but what their kind of general outlook wasn't too bad in some ways, is that you want a fair economy. You want fair distribution of output, so everyone is in a better, healthier state and can contribute to society without getting crushed by any form of oppression, real or financial. And so fair allocation resources is what I would say, and if you have unfair allocation resources, that's misallocation, which then brings the question, which some nerds will say, is you can't define what's fair because it's a moral judgment. I would say that's true, but that's what we have to do. You have to use some moral judgment, and you get a society that's a lot better if you allow people to make moral judgments instead of having rules, instead of having laws and systems that just say what the fair is. Like say it's just all up to the markets. The market will sort it out. Don't worry. Well, no, man. I mean, I do worry, because that doesn't guarantee fairness at all. And any kind of basic kind of physics model would show you that too. You get unequal fat-tailed power law exponential type distributions of real assets, if it's just a complete random market, which, to an economist, well, to an homo economicus person, that just random sort of distribution where it's kind of just drawing from a distribution of like swapping assets, kind of to them could be called a definition of fair. But to me, it just completely misses the moral dimensions. And so you're saying, well, we have to have a whole lot of people that are suffering and poor in order for a few people to be ultra rich, and that's the way we'll define our share of output. And that to me is just completely horrendous and dystopian and just disgusting. So I mean, you do have to make moral judgments when you've got power, and it's good then in that case to limit the power of any particular one person and distribute it more fairly amongst people. That's also a kind of a base structure, is how you distribute your power, and that leads to fair distribution of power. I'd argue, probably. I mean, you could think about it, it's not very rocket science to figure it out. That should lead to fairer distribution of output. And
I think they would say something.
Get the output.
Something to the extent that fairness really means that the ultimately the market decides.
That's what I was saying.
Oh yeah,
and I'm saying no. And I'm saying that's a terrible definition of fairness.
Oh, what fairness? Okay,
it's just terrible. You couldn't get anything worse. That's the fair market is fine for me. Like as far as I put my classical economics thinking hat on, which is everyone has the same purchasing power.
So I'm seeing what Ken is saying. The Austrian business cycle theory, as elaborated by Hayek, is a sign of resource misallocation is when the production process becomes longer and more roundabout. So I'm
that's an interesting nuance.
I'm formulating this. So I asked my buddy.
Oh right.
Yeah.
Past history, human knowledge condensed into a neural network.
Yeah. All right.
Doing the prefrontal cortex response here.
We got Austrian economics defines misallocation of resources situation where resources, capital, labor, time are used in a less than optimal manner due to incorrect signals from the market. Okay. That incorrect signals makes a lot of sense, but that's. I think they will definitionally say that anything the government does is an incorrect signal by definition. So by definition,
I know.
Yeah. Okay.
It's a can of worms.
Okay. Yeah. They believe this is often as a result of interference with price mechanism, typically by. Okay. The Austrian School of Economics, which includes economists such as Hayek, Mises, is well known for the emphasis on the dispersed knowledge of individuals, the spontaneous order that emerges from markets. They argue that any interference with the spontaneity, such as price controls, will lead to misallocation of resources. They point out, okay, I'm just looking for give me a data point that says something's misallocated or not. How do I know? So what they're saying is I can't look at anything. However, it's important to notice or important to remember that detecting misallocation and preventing when and how they will be corrected can be challenging. Yeah, no shit, Sherlock. That's why I'm asking you. That's why I'm asking you. Austrian economics argue for minimal intervention. Okay, I think...
they're missing the moral dimension for one. Just like
let's just even say, let's give them the benefit of the doubt, right? Let's say there is no moral dimension, or that the highest moral dimension is what the market decides.
I don't think you want to concede that principle, but go ahead.
I mean, I'm not going to concede that principle, but for the sake of the argument, even if that's the case, how would you ever know that what the government did or did not do was a misallocation of resources?
Also, the government is a market for votes.
I agree. And I guess that's the other point. I guess that's the other thing, right? It goes down to, and I remember when I was really deep into I think I was listening to one of Rothbard or one of the near Austrian capitalists. Anarcho-capitalist types in the Austrian view. He was going on about how you don't need any government, that the private sector would supply, the judiciary, right? You'd have your private. You'd have your private judges and laws, whatever, and you'd have private militaries and all this, right? I mean, everything would be private, and I kept going back to thinking, even when I was like, I was wearing the hat, I kept thinking to myself, but wait a second. At some point, there's just someone who's the biggest, the strongest on the block that the most people want to represent them. And then wouldn't the kind of natural progression be like, hey, what would be really good? I know you're kind of a king right now, but wouldn't it be kind of good if we all had a say in this thing, right? And so, I mean, eventually, you just kind of get a democracy to occur, right? Or at least a step in that direction. A step in that direction. I mean, you get what I'm saying, right? Because I think in their mind, in the Austrians' wet dream, right? You just, and I don't think there's anything stopping this from happening too. I looked into this some more. If I wanted to, I could start effectively a bank today, and I could say, look, you can give me your lumber, you can give me your gold. I'm going to accept any real resource as a deposit, and I'm going to issue a note, right? And then you can go use that note for commerce, right? Every note is reserve backed by the initial reserve. I don't think there's anything stopping that. And if that's, if that's the dream, if we started all over again, that's the dream. Wouldn't whatever bank first originally kind of got the most amount of traction just become the de facto head, government, right? And then eventually, in their mind, right, you'd have to establish some sort of legal system, right? You'd want contract law, you'd want all that sort of stuff, right? You'd want to make sure the Canadians don't come invading you, right?
Right.
And so if that were to be the case, all of a sudden this bank would need to provision itself, right? And how would they do that? By issuing notes that you have to pay back to it.
That's right.
So I just, what I don't get is how when they escape government in some form, and the minute you accept government, you accept a government provisioning itself, right? The minute you accept some sort of government rule, you have to, that along with that is a government that provisions itself, right? If you just say, all we want out of a government is lawyers and that's it, right?
And we'll just agree nicely. We'll just all come to a nice, peaceful agreement that this is our government. Doesn't need any of the other stuff. Just all agree. It's the whole gold, Bitcoin mindset. I was, it's just a social agreement. We'll just agree on this. Don't need anyone enforcing it with tax liabilities.
So I don't think there's anything that's stopping that entire idea.
Also, that's why if I was supreme dictator, I would, of a very wealthy country like the USA, I would just give Elon Musk and his crew the resources to go off, to piss off to Mars. See how they get on. I'd actually want to run the experiment. Just I'd seriously be quite interested to see how it all would work out. I mean, it's kind of mind-blowing that they can't actually figure it all out in their heads and game it. But I mean, who am I to say I can tell what would happen either? I don't know. Maybe they would manage for a while without anything called a government. But I think what Warren Moses said in the debate with Bob Murphy was something that I agree with beforehand, even, which is that once you get that kind of a power, you call it government. It's just government by another name. You could call it the market. But what you've got, whatever system you've got for protecting people who don't have power, is you could just by definition call it government. Maybe they just don't like the word government. It kind of sounds a bit like that, they just don't like the word.
I mean, that's really what it boils down to.
Something like that. Something like that.
Yeah, I think that's what it boils down to. I'm in agreement. I'm in agreement.
Anyway, interesting.
Yeah.
So the other thing about the triangles is they don't really recognize macroeconomics. This is another thing. I'm a bit straw manning the Austrians here, but I just want to go ahead with the straw man Austrian just for the sake of argument here, is that they fundamentally think that it's microeconomics is bottom up. It's a bottom up like ant colony thing.
Yeah.
So you don't get big governments in an ant colony, and you don't get warfare and all that sort of thing. But it's just a complete stupid analogy, because it's such a different system you're talking about. You can't just take little biological analogies like that, and use that as a basis for a civil society. But suppose you do they ignore the macroeconomics, and that's the whole point about what Bill Mitchell and others might talk about, which is the Harburger triangles and the Oaken gaps. So I always get this around the wrong way. I agree.
I agree. I always mix up my Oaken gaps and Harburger triangles.
The Oaken gaps. Yeah. What are they? Freaking heck. One of them's the microeconomic efficiencies, which is misallocation of resources at a sort of basic level, which is fine. You want to minimize that, but, and here's the MMT or macro post-Keynesian point, the Harburger triangles are so much faster. So they are the lost real output resulting from unemployment, which is what you get if you've got a kind of a feudal or bank or endogenous cycle without exogenous money coming in. So the whole point is that the focus of macroeconomics has to be to eliminate involuntary unemployment. Free labor up to do, good in the community, do what they want. Definitely 100% not make it work fair. Definitely make it all in the good interests of society, because that is vastly they tried to count it, right? And they just came up with it's heaps. How many Oaken gaps fit into one Harburger triangle? It's just a lot is the answer. And so you give up microeconomic efficiencies by having a government that maybe distorts markets. But then you say, well, actually, that is the market for democracy. If you're lucky enough to get actual democracy, and that closes the Harburger triangle. So you don't care at that point how many microeconomic efficiencies you have, because it doesn't matter. It's just the order of magnitude is just immense. So if you understand macroeconomics, you're going to want to look at the MMT picture of how you get then. So the question is how you get full employment with some price stability, because if you're a government, the only way you're going to get full employment with some sort of exogenous currency injection, which is kind of basically government of a sorts in a sort of minimalist sense. And then you've got to say, well, how are we going to do that? And so MMT has the answer for price stability, because you want price stability, because once you've got a government, I always say you can have as much inflation as you care to please, but practically speaking, you get voted out of office if you have too much inflation. So MMT will give the answer for that. And you've got to think macroeconomics. You can't be just thinking microeconomics, because then you have these Harburger triangles that lost output from unemployment. That is just, horrific if you actually look at the numbers. And I think Austrians just don't even talk about it. Probably don't even know about it.
Yeah.
It's a big MMT point. So I think that's another potential, you're going to talk past each other if you get into that side of the debate. There's got to be some sort of education of Austrians to understand the importance of the macro, and unemployment is far worse. The social costs, the depression, the suicides, the crime, the anxiety. Bookmark crime, by the way. I got a point about that I got from Ryan.
Okay.
And just the horrendous costs of involuntary unemployment, and that it just far exceed any cost to society from microeconomic inefficiencies. And it's just laughable in today's world if you understand the macroeconomics. If that any Austrian can be found today who would still push it's all about microeconomic efficiencies. And I would just ridicule and laugh at them about that. Well, I mean, I want to try to educate them.
Yeah.
But it's, at some point, sometimes there's just no grasp of it in order to even start with education about that. But it's something that should be done by MMTs. Yeah. So that's the point. I did have something about crime, but that's a bookmark for later on.
Okay. I mean, you can jump into it, maybe. I don't know.
Any further thoughts on that, or anything from the chat? Because while I'm ranting like that, I don't read the chat. It distracts me.
I agree. I do try and read the chat, but it distracts me. Speaking of distracted, what I was writing down notes. What was I supposed to think about?
Yeah, I don't know, man.
Yeah. Okay, I think
Unemployment, microeconomic efficiencies are nothing compared to the macro
No.
inefficiency
Like
of
about
unemployment.
30 minutes ago, I said you brought up a point that I was a good point that I
Oh,
wasn't really prepared to.
the bankruptcies is a bankruptcy in the
Yeah.
private system is exogenous money.
Okay. It was something about
So
that.
that's
Yeah. Okay.
it's kind of wacky though, because you have to have the cycle in order for the bankruptcies to get realized. So it's like a seesaw, Marjorie Door. It's like up and down, very disruptive, right? So if you have exogenous money coming in from a government doing like public purpose spending, and again, I want to reiterate, I know we don't have perfect governments, but the idea is to get a better democracy, not to have less of a democracy, for heaven's sake. So once you get a better government, that injection of exogenous money can be spent for good things rather than warfare and, crony capitalism like it is nowadays. So that's stabilizing. That's because the government can act counter cyclically, so you don't get the big boom and the bust, and then eventually the bankruptcy. The fact that you have bankruptcies in a reasonable democracy with a government is like just bizarre. It's like why is anyone having to go into bankruptcy? That should just never happen. But it would happen a lot more if there was no government providing an exogenous source of the means to pay taxes, etc., etc. I know it's an MMT bias story, because the way the government forces us to need their currency is via legal liabilities. But I guess you want to try and make that the frame of the debate with Bob. Maybe understand when are you talking like in the Austrian frame of, okay, we don't have a government, or when are you talking in the MMT frame and accepting for the sake of argument?
This is
at
actually
the moment
the
we're talking the MMT system, and it's the current. What is driving the currency, Bob? What's actually driving the currency, Bob? Is it because we can melt it down as a metal and use it as jewelry?
I hope he's not watching, because I have a trap for that. I think I have a pretty good trap.
Sounds
for
good,
that.
man.
Yeah.
Well, I think we're all going to be looking forward to
we'll see. Hopefully,
hearing when that's released. And the recording is of Friday. Is that right? Your Friday?
Yeah. Not tomorrow, but the day after.
All right, man.
Mark brought up a good question here. How can people preserve their purchasing power rather than relying on the nominal value of the currency under MMT? And actually, in that again, 2 or 3 times, was it Carney? Is that his last name? God, he cuts off Mosler in the debate, and Mosler was making such a good point. I never realized he made this point. It's something I'd kind of stumbled across a while back, or just kind of thought of, and Mosler beat me to it, turns out, as you would expect. But you don't want the government choosing an investment vehicle as a form of savings, right? And so, and I think this is the question that you're kind of getting at here, what you're trying to get at. But you almost don't want people to, you want to preserve, you want price stability, right? I'm not saying you want to show up one day and, a loaf of bread is 10 times what it was the day before, right? I mean, you want it to be predictably
disruptive.
Yeah. But you also don't want people hoarding the currency. I think it's the most important part. I don't mind people hoarding stuff, but if they're going to hoard something, it should be in the form of investment, right? I mean, it should be benefiting the rest of kind of the growth cycle. So
although as Warren points out, if some old lady with a house full of cats is got $1 billion in her bank account, and she's not really conducting warfare with it, then leave her alone. But the point about hoarding is how you get the hoards and whose neck you're stomping on to get that money that you're hoarding. And so it's like the small guy, with squirreled away 100,000 here, or maybe even 1 million. It's not a big deal. It's the people who get billions of dollars, and what is that? It's not just the little old lady with her cats who's got $1 billion in her bank savings account. It's for a rainy day. Should an umbrella ever cost $500 million? It's the power that people exercise with that, and they can influence government. They can do all the lobbying and all that sort of stuff. And talk about market distorting. That's distorting your democracy in a huge way. And so it's why you don't want currency hoarding. Has two sides to it. There's two sides to that. One is well, they're not spending it, so they're not helping run the economy actually physically. That's one thing. But that's like paradox of thrift. Someone's going to be spending because we've got to eat.
Yeah.
And so in a sense, you don't have to worry about savings. The question about the private savings is I think the question of power and distortion of your actual market for democracy, your market for government policy. That is a market, and it's dominated by rich firms and lobbyists and wealthy individuals. Not that they're always all insane and greedy, but quite a lot of them are. It goes to the point about psychopaths disproportionately occupying seats of leadership, and so you got to be very careful about that. So you want your people in government not to be wealthy people like the Trumps or the Bidens. You want your people in government to be very ordinary, humble people. And so the last point I'll make about that is that all these savers and hoarders of dollars, they're causing the government to run a higher deficit. So if they don't like the government deficit, they should give some of their money back.
Yeah, they should go spend. Yeah. Or they can just give it back to the government.
Yeah.
So Ken's point was to buy what are called TIPS, Treasury inflation protected securities. So maybe the question Mark was asking was a very literal question, like, hey, what do you do to preserve purchasing power? Quite specifically as like as a potential investment. In that case, I mean, if it's long term, the buying.
I think he means.
Yeah.
Sorry, go ahead.
No. If it's long term, then that I like the idea of kind of like the all weather. If you're not looking to actively invest, the all weather portfolio idea. That's that's one way to hopefully hedge against everything and still remain with similar purchasing power long term. I mean, assuming it's 10, 20 years is what you're looking for.
Right. But is that the question?
Well, I don't know. I mean, I could
because it's a very middle class, upper class answer to the question.
Well, I mean, you're not.
Is MMT, right?
Yeah,
MMT,
maybe you're right. Maybe you're right.
Yeah,
but maybe he's saying
is
maybe
if
you
have government policy.
Maybe he's asking like as in I guess he's saying under MMT. Okay, I think the way I read it the first time
under
was
MMT,
right.
we are under MMT. So the point of this is to use your understanding of the monetary system, your lens of MMT, and the point of it all is that you don't really worry about inflation. You do politically, you have to worry about it, but in a sense, you're not really worrying about inflation. You are worrying about purchasing power. And so it shouldn't be up to the private, citizen to have to worry about that. Why are you having to know this, what investment vehicles
Yeah, absolutely.
Why are you actually wasting your freaking life worrying about what fucking investments I have to make? I don't want to worry about that.
Well, I do, Bijou.
I want to work for society. I want to have a job.
I agree.
And I want my job to maintain my purchasing power. So in the MMT system, you can have a job guarantee, which is a wage floor, and that protects your purchasing power for everyone. Everyone gets protected by that. Not a freaking UBI. So anyway, that's my rant.
That's a good point about the UBI not protecting the purchasing power, but the job guarantee does. I was thinking about your conversation you had with Warren this week, in particular in my own circumstance, my own life, and some of the opportunities that are quickly emerging for me in the finance world relative to what I currently do, right? And and I mean, I love the finance world, but I also know, you know, my day job, and the work I've done for society via this has been demonstrably saved, you know, potentially thousands of lives, right? You know, increased the health and welfare of this nation that I live in, right? And yet there's such a massive financial sector out there, right? Where I don't even have to do good in the financial sector to become right, you know, wealthier beyond my dream, sort of thing, right? I mean, any of the major firms can show you that, right? They're getting toasted this year, but yet people still keep funneling money into them, and it is so perverse that you have this massive financial sector that you know, takes, in this case, the real resources out of the public sector and sticks it into the wasteful private sector. But I know you were talking to Warren this week, and you can maybe elaborate on this. But he was saying one of the things he went off on when you were chatting with him is what he would do to the financial sector. So
that's right. Yes. So people in the chat, you know, or the regulars in the chat will know I'm a physicist or a mathematical physicist, educator, MMT. You know,
you can drop the 3 letters. He's a PhD.
Data scientist, all this stuff.
Are you was your PhD in theoretical physics, or were you on the?
No, my PhD was horrendous. Condensed matter physics.
Condensed matter. Well, yeah.
Sticking myself in an ice box all the time, growing ice crystals and doing experiments.
Yeah.
I really didn't like experimentation.
Yeah. Okay.
I was kind of blue collar, you know.
Yeah, you were PhD. You're a poet laureate. That's what your PhD was in.
Yeah.
Rowan Nora got it right.
Thanks, Rowan Nora. Love you. Damn, you know, experimental physics. I just would set the lab on fire if I was at it for too long. So I sort of went more into modeling in nuclear magnetohydrodynamics, which is very cool stuff.
Oh, okay. NASA, I thought you meant like runway modeling for a second there.
I don't know what that means. Yeah, so
a runway model, like a supermodel. Okay, never mind.
Nah, man. My first thought was aircraft. And my second thought was is Silicon Valley tech startup runways, and the third thought on the supermodels didn't come until you actually said it. So Anyway, so people in the chat who don't know, I like doing a bit of physics still, and you know, Warren Mosler, if you've ever listened to the MMT podcast from the UK, Patricia Pino and Christian Riley, occasionally you might find an odd episode where Mosler talks about, he just jumps in and says, "Oh, by the way, do you know I've got this theory of physics?"
He did that. We discussed it on our stream. We discussed. Yeah.
That was cool. Yeah. So okay. The uncool part of the story, I have to admit, is that I did send Warren a question from a dude on Twitter who asked me about Bretton Woods.
Yeah.
And the constraints on banking during Bretton Woods, because Steve Grumbine had asked me to chat about foreign exchange, BRICS, and you know, how the foreign exchange stuff works with countries being import dependent, all that sort of thing.
Yep.
And how there's no reason at all to, you know, be scared of the dollar melting down or crashing, or the yen doing this or that, or the whatever. So we had a good chat about that. But you know, I'm not an expert. It was just that he didn't have any expert on call at the time, so he just asked me to talk about it. I'm not an expert on that stuff.
That was like my dating life in college, you know.
You have to explain that to me in a sec.
I was never the primary guest, right? I was just I was the last one in line. You know, I've got no one better to go with this Friday night to go see the new Spider-Man movie. But there's Doug at the end of the Rolodex. I'm saying girls weren't into me. Okay, that's what I'm trying to say. I'm trying to open up here just a little, But
I never entered that market, but I can sympathize. I understand.
Yeah, because you're a runway model. You're good looking, and you're one of those tall.
Am I a monopolist?
Yeah. New Zealander. Yeah.
Anyway, so what do you know? Like, on Friday night, I'm kind of like a bit frazzled because I've been working late. Turns out on a project for Douglas that now is no longer needed. Oh my God, I'm gonna have nightmares about that now.
It's not needed. We learned a lot. It's like your theoretical. No, it's like your hard matter physics PhD.
Yeah, no, I'm all for doing things and then finding out later that they're completely useless, and then moving on to something else. That was saved me time. Anyway, so what would you think? Warren Mosler just comes up on my email, says, "Oh, we should chat about this. We should chat about this, right?" And
I'm gonna guess not Bretton Woods. He wants to chat something else.
It was supposed to be about. And anyway, so then on Friday night, this is early morning, actually Saturday morning, like 3 a.m. or something. I say, yeah, sure, we could chat about this. I'm available, give the hours because I can't talk after 9 p.m. until my daughters wake up because they're nearby, and I just completely upset them if I'm talking at night when they're trying to get to sleep. So anyway, what I do is I set, maybe 9 a.m. So I'll have to stay up all night, or maybe I'll get like 4 or 5 hours sleep. So I decide I'll go for the sleep because my eyes are sore from the cat allergies and everything. So I go to sleep and I wake up and it's 9:30. And I'm thinking, there's no way he's going to just, call me at the earliest possible time that I set. So I look at my WhatsApp, I look at what was I looking at? Emails. Something, I was looking at something and no messages. So I'm okay. But then I open up an email. There is an email from Warren. And it's like replying, and it's like, I'll be on the call soon. What? I'm thinking, what?
So you've slept in past the call at this point.
Yeah, I've slept in past the call. And so it's like, but what call? What call? He's not going to call my phone. And then it's like, it's I'm just thinking, okay, what time is that? That's 8:30 in the morning. So he's actually calling me half an hour before I told him he could call me. And so maybe, I don't know, maybe he got the time wrong or something. Maybe daylight savings time. He got off a little bit or something like that, right? So anyway, I'm figuring out, where is this chat? What chat is he talking about? I was like, I don't know what chat he's talking about. So I'm figuring, it's got to be Google, right? So I go to Google Meet, but there's no link. He didn't send me a link or anything. And so,
this is what happens. This is what happens when you use Linux all the time. You don't have the slightest clue that you can call.
I was just about to say that, Douglas. Exactly. You predicted me with your neural network mind there. I'm a GNU Linux command line guy if I can, possibly. And so I'm not used to all these Google apps and spreadsheets and shit. So I'm looking around and I'm looking, there is a Google app called Chat, not the Meet. So I use Meet to conference with Douglas. And so there's this chat. So I open up this chat, first time I ever used it. And it's like, dropped missed calls from Warren Mosler. Missed call. Are you there? Hey, are you there? And it's like, oh, shoot. So usually I would break out in a sweat if this was like a business thing. But I'm thinking Mosler's a cool guy. And so I just reply back in this chat app thing that, my girls hadn't woken up, which was true. And, sorry, I missed you, but I'm up now and on the chat. So 5 minutes later, the thing rings and it's Warren on the phone. Go, how are you? How's things? What's up? It's cool as any ever. Not worried that he'd called me 4 times and I just dropped him. Anyway, that's the funny background.
So the setup is there. Now you guys, I know you guys talk physics,
and we talk physics. So what do you think you would talk about? That was I was going to ask.
Oh yeah. I'm sorry. Yeah.
You spilled the beans.
I did.
So you want to talk about physics?
Yeah. Which is freaking hilarious. Yeah.
We had a great little chat about his physics theory of gravity.
I did ask Bijou. My question was, were they good theories, right? Or were they not were they right theories per se, right? But was his intuition good? Because I know whenever people who are not classically trained in some, whether it be physics, math, whatever, right? I mean, physics is a easy target. Oftentimes, if they have their own theory, it's like a crackpot theory, right? But Bijou, you told me these are like clearly his intuitions on things are good, because these were like legit close to what what you would expect in physics land, right?
Yeah. Well, but actually, it's a little bit more interesting than that. I don't know how much I could say today that the chat would understand, except Ken PDX will understand it.
Yeah.
Maybe a few other MMT eggheads also know a bit of physics. But the whole paradigm is right. Quantum mechanics. You have to get gravity out of quantum mechanics. And so what I got onto was way back in the 1990s was that it can be the other way around. So it's another MMT story. Like they got it backwards. They got it the wrong way around. So it's a possibility, right? So it's a bit speculative. But in the 2010s, 2012, one of the founders of superstring theory, Leonard Susskind, and probably the most insightful theoretical physicist of the last 20 years of our sort of generation, Juan Maldacena, Argentinian, he and Susskind came up with this idea that quantum entanglement was actually a kind of a minimal wormhole bridge. And if you know what wormholes means, that's gravity. So in a sense, I was right that, I'm potentially right that quantum mechanics comes as a result of gravity, not the other way around. But here's the kicker, right? Maldacena and Susskind and all that, they never realized this. They still haven't realized this. They're the other way around. They think quantum mechanics must somehow generate gravity. So the entanglement generates the wormhole. So I'm like, no. Because this is what I figured out back in the 1990s. Is that it's the wormhole that generates the entanglement. And it's just a matter of flipping the perspective. It's kind of like an MMT thing, right? Fixed versus floating exchange rates. So anyway, turns out Warren Mosler, our very own favorite MMTer, has the same idea as I had, essentially. And he described in more detail his idea of he calls it gravity, but what he's really saying to me in my head is space-time, so a Lorentzian or pseudo-Riemannian manifold. That's kind of what gravity is, as long as you have mass in it. But we expanded on this thing that you can get for a few minutes on our live stream back whenever it was, and the MMT podcast. You can hear Moses talking about this stuff, and it's kind of cool. But it was really awesome that we had this really long conversation about it all, and he was able to expand on his theory. And to Douglas's point, just to wrap it up quickly, you can DM me or contact me if you want to know about any of this, or look at my physics web blog. But to wrap it up quickly, so basically, is it crackpot physics? Is it some amateur? Because Warren, I asked Warren, does he know about these things, Susskind, Maldacena, ER equals EPR conjecture, and so forth? And he says, no, I don't know. I don't know anything. I don't know any of these names. He doesn't talk to any physicists. He just came up with this apparently by himself, just his musings and his, in between tennis breaks or whatever. So it's not crackpot. That's the thing. I mean, I would say that, right? But a lot of other professional physicists would sort of say, oh no, man, quantum mechanics, it's all quantum mechanical. It can't be the other way around. Come on, what are you? You're a crackpot. So they might call me a crackpot, but if you have a look at my website, it's all very conservative. I have this conservative approach to physics that you don't want to just invent any wild ideas like many worlds or parallel universes. What you want to do is try to get the most with what you've already got and what you've already understood. And a theory of space-time is very well understood. And so it's a radical conservatism. This is not political conservatism; it's scientific conservatism. It's like you try
I wasn't going to mix up the two. Don't worry.
Yeah, no, not you, but just in case anyone in the chat.
You've always come across as a closet conservative, and now it's coming out. Yeah.
Right. So anyway,
you are the Rush Limbaugh of physics, is what you're trying to tell me.
So the last thing was that he the Warren's like this, right? He'll say, what's your name again? And I was like, he didn't know.
He didn't know my name. That was the sad part. I go by. I make it easy. I go by one name. I'm like.
I know.
I'm like.
Yeah, he'll come on. He'll come on a podcast show, and he's got so many contacts, right? And so he does that to me. He says, "Oh, Bijou. So what were we supposed to be chatting about?"
There is a Eugenio. There is a Bijou. There is a Bijou website. Bijou, get the link and. Send it to
me, man. I'll drop it in the chat.
If it doesn't stick, let me know. I'll make sure. I'm pretty sure you're admin now, but tell the punchline going all the way back to my story about
going back to Douglas's point is that we do talk about Bretton Woods and everything, and he gave me a couple of new fresh jokes, and but then I forget what triggered it. But we were talking. We were then by now we were covering a whole lot of MMT points, and eventually we came back around to the physics at the end, which was cool. But while we were talking, we were just chatting. Now just friends chatting, if you like friends chatting. Obviously, I'm not a friend of Warren at all. He doesn't know.
Oh, come on.
He doesn't know what I do.
That's not part of the story.
It was kind of like, yeah. He was so cordial. It was like chatting with an old friend. It was remarkable. And so he just starts at one point going off on me. Like, the financial sector, just get rid of it. He was just like, wipe it out. No need for it. Just totally parasitic. And he was like, he wasn't screaming or shouting like Grumbine, but he was Grumbine without Grumbine. Another Wheelerism for Michael Cruz here. He was Grumbine without Grumbine. He was just really, really seriously just telling, it was just chin wagging with me, but he was like, get rid of all the parasitic financial, just we don't need the financial sector at all. So it's a very sort of, what would you call it? I guess Bob Murphy said, we need some paleo MMTs. This is kind of like, I don't know, a bit like paleo MMT in my mind. I don't know what that really means, but it's like, basic raw kind of like strip back everything that we don't need. Ecological, minimalist economics. And that was from Warren. I hope he doesn't mind me sharing this with you guys publicly on YouTube. I thought, private conversation. And there was only one other thing about Jerome Powell that was a little bit sensitive, but he has also talked about that publicly before. So
I thought the punchline is that we need to get rid of
purchasing power through the job guarantee in government.
We need to get rid of the finance sector.
Rid of the finance sector because it's not actually providing.
It's not actually.
Power.
Yeah, exactly.
For everyone fairly.
Yeah.
That was awesome, man. Yeah, Eugenio. Yeah, you're right. I'll just maybe drop that in. Did you want to talk about the Jerome Powell thing quickly?
What Jerome Powell thing?
Because it related to what you said before.
Oh no, it's fine. It's I would hold that as
hold that off. Yeah,
I think if he says that, that's for him to share.
Yeah, Rowan Nora's right. Yeah, Stalin's most. It's Lenin most. What would you call it? What would be a word blend for that? Vladimir Mosler. That's the Lenin Vladimir, not the freaking Putin. Yeah.
Is that the link to
Yeah,
to your
that's
blog.
that's the
Yeah,
physics.
yeah,
That's the
yeah,
physics.
yeah.
It is a work in progress because these days I don't get a chance to
Oh,
write much on it.
no.
So
Here is it though. Listen up, chat. This is big. So this is absolutely. We haven't even started. Well, we maybe just put the shovel in the hole to see if this is something that we're going to do. But one of the things that we want to spin up here. So we're MMT macro trader. I'm almost to where I want it just to be, right? I mean, I feel like I've finally developed the product that I want. I'm going to continue to iterate on the deep MMT stuff. That'll be, a lot of that stuff will be coming out soon. Next week we'll dive into that. I've had a lot of progress on that. But in terms of where I need Bijou specifically to really help me with some of the MMT macro stuff, that's going to be fading. And so we were chatting, and this is where we need your input, right? We absolutely need your input and feedback on this idea. But speaking about Bijou and stuff that he's going to put out, we want to create, we don't know what this would look like, but like an opportunity, because Bijou is such a good educator. We want to create some sort of like MMT education platform. Also, part of that would be not only, creating MMT as education as a platform, but also really have it targeted. And this is where myself and some other people, we're working with the Applied MMT podcast guys on this idea where we could offer some of our expertise to really create something cool. And by that I just mean something that's a little bit more applicable to the real world and kind of what's already out there with the MMT stuff. And Bijou would kind of spearhead the education. And I'm literally thinking what would be kind of neat is almost like a 6-week class sort of thing, or an 8-week class sort of thing. So if there are any ideas or anything that you guys could dream up that would just, one, that you'd want to watch, listen to, engage with, and two, would just be helpful.
Well, yeah, two tiers, say, because we've got a bunch of MMT eggheads in our chat here.
Yeah,
and also quite a few people knowledgeable about Austrian economics. So that would be a very high level group, I would have thought.
Yeah.
Whereas you'd also want a free tier for your friends or anyone who could sort of come in and do things. You can do Bill Mitchell's MMT Ed course for free if you want to, but it'd be cool. It'd be cool if we could cover other angles as well here.
Yeah. That's kind of what I'm thinking. Where is Bill Mitchell? Does he have that on YouTube? Is it just accessible?
MMT Ed. No, it's like a term. You have to be in on the right term, and then it closes down.
Okay.
So it's like a university course, but when he does it, if you're on his email alert list, you can go to mmted.org or edX, whatever it is.
Okay.
edX is the platform.
MMT
his course is Newcastle University, and you just sign up for whenever the next course is going to be. I don't know. Usually one's 2 a year, 2 or 3 each year, and it's just like 4 weeks or something. It's really good for beginners.
This is it, right?
I'd really recommend it for any beginners, anyone who wants to just get into MMT from almost no background. You don't need to be an economist. There's very little mathematics, and it's nice. He if you're familiar with Bill Mitchell's blog, he used to do these multi-choice questions on every Friday.
Yeah,
and some of them were very weaselly worded, so it was quite easy to get them wrong. Although once you get used to it, it was easy to also get them right. But he does these little word things where one word will change things and flip the correct answer to what you thought it would be. And so some of those come up in the course too. So it's kind of cool. But it's not what I'm saying. It's not a degree of difficulty that is off-putting. It's very, very accessible and good for anyone of any age who can, doesn't mind reading a few articles. There's a bit of reading, but I think Douglas could still manage it.
Does it have audiobooks? Can I do text to audio?
Yeah, in as well.
All right. Well, I didn't realize. I mean, it shows you how much I really follow the broader MMT world. It's not finance. I didn't realize it. So maybe maybe to fill a niche or something like that.
Fill a niche
that doesn't exist. I really, one of the things that I'm kind of slowly but surely working on is an application that pulls in all the data from the Fred and allows each to instantly create a sectoral balance for each country, right? To me, that angle of it, right? The truly kind of data-driven side of kind of an applied MMT approach, but more from a policy side or an education side, I think would be neat. And kind of engage with the battle of ideas, that sort of thing, to kind of win the hearts and minds. That's kind of what I had in mind, as opposed to maybe a directly, kind of a course style. But keep an eye out for that. Again, it's at the ground level, but it's something that I think we want to start. It
could
towards.
Also be the software side of things and the modeling side of things.
Yeah. That would be
get
cool.
some
cool
get
too.
some Ty Keen's expertise in
that
as well.
Cool. Yeah, that would be really cool.
Because there's definitely a niche for that one.
Yeah.
Because Steve Keen is doing Beth on his school, and Ty Keen's is doing his YouTube series and all that.
Yeah.
And so there's some experts there that we could sort of bring together and make a polished version. And and I can do one that you don't need the Minsky program for. You can do it sort of more low level and sort of hack around with it.
Yeah.
Because I think hackers need to also come in. That, you know what I mean by hacker?
I do. Yeah.
We need them to come into MMT space too. Yeah. Hacking, computer security breaking is cracking with a C. Hacking is playful inventiveness.
Yeah.
And doesn't have to relate to software.
You're hacking away at the...
Yeah, you're hacking away at MMT. You're hacking away at art or poetry or robotics or whatever it is. Or macrame.
I don't know what macrame is.
I don't know. Macrame is a go-to typical, like, quintessential artsy, crafty thing. It's like knitting, but with a kind of a little device instead of knitting needles. It's a very crafty thing. You can make interesting objects with your macrame, like tubes. It's easy to make tubes, so it's like knitting, but a little bit superpowered, but still very, very hands-on, low-level, artsy, crafty. So you can hack. That's what hacking is. If anyone is not, I mean, all our eggheads in our chat will know this already. I'm just saying this.
I gotta cut you off. Hey Zeus,
yeah.
Thank you,
Jesus.
man. Thanks for
also
the super chat. Really appreciate it.
Super chat reminds me of asking.
Hold on. Let me think. Jesus, hold on.
Oh, go ahead.
Hold on. Thank you, Jesus. Yeah, dude. Thanks for the super chat. Today was a great day. I hope you have a great day. I think you're out in California by the flag, so have a great night. See you next week if you are taking off. Thanks for dropping by. We appreciate you, man.
Yep.
All right, Bijou, go ahead.
Oh yeah, one of the other avenues in that would be like responsive education. We could get into that, like, people have got questions that they don't have the time to dig into, some of the modeling and they might, people. So I was thinking education also for people who kind of want to make more serious data science points with colleagues. Kind of that would be kind of like MMT Macro Trader for academics who don't do economics good.
Yes,
Zoolander School of MMT.
Yeah, the Zoolander School of MMT. I do. That is one of the things. What's really wild is I aimed some of my deep learning models that I built specifically for markets at GDP and stuff, and they just don't learn as well at GDP. I don't know what I'm missing. I'm thinking what I need. Is stuff like I think what I got to add is some layers that involve like what the Atlanta GDP now is tracking as well. To try and anchor it. To try and actually have it predict GDP better. But I do think some of the deep learning stuff could be applied more broadly academically, probably better for humanity to spend my time on that. But by God, it works good on markets. So I'll keep doing that.
keep doing that for now. Yeah. Anyway,
I'm kind of winding down. I'm kind of winding. I'm kind of winding down. Yeah, I'm kind of winding down myself. Everyone's heading off to bed.
Yeah.
So I might call it a night here. Yeah, I have nothing else. Next week, I don't want to say I promise, but you know what? Next week will likely be a recap of the discussion with Bob Murphy. So if that plays out, then we'll do that, and you guys can all roast me for not being a true. Eugenio, man, I always love that you hang out for so late, man. I appreciate that. Yeah. You're the best. What was I going to say? You guys can all roast me next week for not being a true MMTer, but and not representing MMT. But I do have some deep learning stuff that will show very soon. I've been doing a lot of work, and I'm geeked to kind of show some of that off. So if that's something you're interested in, make sure you're tuning in here. And I'll I always like to show this stuff off to the live stream first. I will eventually make, a short form video, but for you who are willing to hang out in the stream, you guys get the perks. But
you can stay around for the latest outro if you want. Yeah, we're probably about to wrap up in a second.
This is it, man. Bijou, I was just gonna say I'm handing it off to you, and I'm gonna let you take it away for.
All right. Well, since you haven't let me do the nice Buddhist monastery gong yet, we'll have to sort that out. We didn't have time. This one is the new, freshly off the press French compteur outro for MMT. So, le système de revenu de base universel également connu sous le nom de revenu de base non gagnant est un nouveau cheval de Troie libéral et un géant va te faire foutre à la classe ouvrière.
Are you French or are you Russian? What?
No, man. I used French for 1 year in high school. I had no idea what that would mean, except I did use the Google Translator to help me, and I hope some Canadians get a little bit, embarrassed hearing that. Anyway. For more high-class image translation,
you just lost your what do they call that? The poet laureate or whatever that your PhD in poetry.
I know. I have to give it back. It was borrowed from the Austrian school of PhD. For more high-class MMT poetry, tune in same time again next week, same time. Same MMT time, same MMT channel. I'm fumbling my words. Sorry about that. We're out of here, I guess.
Yeah. Have a great night, everybody. We will see you next week. Take care.